Credit cards look shiny and attractive. They come with offers, rewards, cashback, and travel perks. Banks market them as tools of financial freedom. Swipe now, pay later. It feels like magic money. But here's the truth. Credit cards are not designed to make you rich. They are designed to make banks rich. Banks do not give credit cards out of kindness. They give them because credit cards are one of the most profitable financial products. Banks earn in multiple ways. They earn through interest charges when you do not pay the full balance. They earn late fees if you miss the due date. They earn annual fees just for keeping the card. And they even earn from merchant fees every time you swipe. Even if you are disciplined, the bank profits. And if you make just one mistake, the bank makes a fortune. That's why the minimum payment trap exists. Your statement may show a balance of $2,000 and a minimum due of just $50. Paying only $50 feels easy. But the hidden truth is shocking. If you only pay the minimum, interest piles up. Your debt keeps growing instead of shrinking. That $2,000 can take decades to repay. And you might end up paying $5,000 or more in interest on top of the original debt. This is how banks trap millions of people. They know psychology. People see a small number like $50 and think, I can handle this. But while you think you are in control, interest is silently draining your future wealth. Another trick is rewards and points. Credit cards advertise free travel, cashback, and luxury benefits. It sounds like you are beating the system. But remember, banks never lose. The average person spends more when using a credit card than with cash. Studies show people spend up to 30% more because swiping feels painless. That extra spending easily cancels out any points or cashback you earn. You think you are winning free rewards. But the truth is, banks are winning by making you spend more than you should. Even 0% interest offers have traps. Banks often promote 0% for 12 months on purchases or balance transfers. But hidden in the fine print is a big catch. Miss even one payment, and the 0% deal disappears. Suddenly, you are hit with interest rates of 20% or more. And sometimes, interest is charged retroactively from the start of the promotion. So what felt like free money becomes very expensive money. Credit cards also thrive on fees. Annual fees, balance transfer fees, late fees, over-limit fees. A single mistake can cost $35, $50, or even $100. Multiply that across millions of customers, and banks earn billions. Now, let's talk about interest rates. The average credit card interest rate in 2025 is around 20% to 25%. Compare that to a savings account, which might pay you just 4% to 5%. So if you carry debt, the bank earns 5 times more from you than you earn from them. This is why banks push credit cards harder than savings accounts. They make far more money when you borrow than when you save. Some people believe they can outsmart the system. They say, I will always pay my balance in full. That's smart, but banks already calculated that too. They know a large percentage of people will slip up eventually. An emergency, a job loss, an unexpected bill, and suddenly you carry a balance. That's when the trap springs. Even 1 month of carrying a balance can wipe out years of cashback rewards. Another hidden truth is how banks market cards differently. Premium cards with high annual fees target people who want status. The shiny metal card feels powerful in your hand. It signals success. But most of the benefits are things you could get cheaper elsewhere. Travel lounges, insurance, concierge services. Banks make sure you feel special while quietly charging you $500 or more each year. Meanwhile, basic cards target everyday consumers with slogans like "Build Credit" or "Cashback on Groceries." It sounds harmless. But if you overspend even slightly, that cashback becomes meaningless compared to the interest charges. Banks also use data to keep you hooked. They track your spending patterns. They send offers that match your lifestyle. Love to travel? They will push travel cards with bonus miles. Shop a lot online? They will promote cashback on e-commerce purchases. This isn't generosity, it's psychology. They are nudging you to spend more while making you believe you are saving. Late payment fees are another silent killer. Miss a due date by 1 day and you're charged $35 or more. Do it again, and your interest rate might jump permanently. A single mistake can cost you hundreds over time. And banks know most people will slip at least once. Then there is the over-limit trick. Spend beyond your credit limit, and instead of declining the transaction, some cards approve it. Sounds convenient, right? But then they hit you with an over-limit fee. It's yet another way they turn your mistake into their profit. Credit cards also encourage lifestyle inflation. When people earn more, they often upgrade their lifestyle instead of saving. Credit cards make it even easier to do this. You start buying nicer clothes, dining at better restaurants, traveling more often, all on credit. By the time the bill arrives, the money is already spent. This lifestyle trap keeps people in debt for decades. Banks also play the long game. They know that young adults who get their first credit card will likely keep using cards for life. So they target students with flashy offers, free merchandise, or sign-up bonuses. They want to hook you early before you understand the real costs. And once you are in the system, it is hard to escape. The credit score system also ties you to credit cards. To build a high credit score, you often need to use credit. That means banks have created a cycle where people feel they must use credit cards just to be seen as responsible. It's a clever trap that benefits them, not you. The truth is, banks do not want you completely broke. They want you just comfortable enough to keep spending. Too much debt, and you might default. Too little debt, and they do not make money. So they design offers to keep you in the middle, always paying, never free. So, how do rich people use credit cards differently? They treat cards as tools, not as free money. They pay balances in full every month. They use rewards strategically without falling for overspending. And they see credit as leverage, not lifestyle. The average person, however, treats credit cards like an extension of income. That's the biggest mistake. If your salary is $3,000 a month and you spend $3,500 on a credit card, you are not richer. You are poorer. Because next month, you will start with a hole you need to fill. The banks know this cycle. That's why credit card advertising is everywhere. Billboards, TV, social media, airports constantly reminding you of the benefits. But rarely do they highlight the dangers. They show smiling families, luxury trips, happy shopping sprees. They never show the stress of debt collectors, the sleepless nights, the years of payments. So the real truth about credit cards is simple. They are not free money. They are debt-wrapped in shiny packaging. They are tools designed to make banks billions at your expense. And unless you understand the game, you will lose. But you can beat the system if you stay disciplined. Always pay your balance in full. Never chase rewards by overspending. Avoid annual fee cards unless you know you will use every benefit. Don't fall for 0% traps unless you're absolutely sure you can pay on time. And never, ever rely on credit cards as emergency funds. Build real savings instead. If you do this, you can flip the game. You can use credit cards without being used by them. But it takes awareness, discipline, and control. Remember, banks profit when you slip. Your job is to never give them that chance. Because true financial freedom comes from saving, investing, and living within your means, not from swiping plastic. And if this message opened your eyes, hit the like button right now. Subscribe to the channel for more videos on money, investing, and financial freedom. And let me know in the comments, have credit cards helped you or hurt you? Your story could inspire someone else to escape the trap.